You just got the notification. Your order has shipped. That thing you've been waiting for, the latest model, the newest version, the shiny upgrade, is on its way. You feel that little thrill. New, perfect, untouched. Meanwhile, in your closet, last year's model, last season's style, sits perfectly good, gathering dust. Or worse, you throw it in a donation bin, feeling virtuous but getting nothing. That's literally you, isn't it? Trapped in the new is better trance while a parallel universe of commerce is exploding. One where yesterday's purchases are today's treasure, and the smartest investors aren't funding the creation of new stuff. They're funding the recirculation of the old. My name is Nick, and I spend way too much time thinking about circular cash flow. If you're someone who feels guilty about how much stuff you own but also feels the constant pull to buy new, make sure to hit subscribe and give this video a thumbs up. Look, we've been programmed by a century of advertising that value is a one-way street. Factory to store to you to landfill. Our entire economy is built on this linear model. It's wasteful, it's expensive, and it's making a few people at the top very rich while your net worth gets shipped off with the garbage truck every week. Here's the thing. That model is breaking, and the cracks aren't where things fall apart. They're where the light gets in and money pours out. A massive, multi-hundred-billion-dollar economy has emerged not from making new things, but from making old things valuable again. Cut to a clean, animated graphic showing a circle, not a line. Arrows flow. Manufacture to first purchase, to use, to resell, to reuse. The circle spins with a satisfying click. The psychology and the pivot. Let's diagnose it. First owner bias. Our brains assign irrational value to being the first person to own something. That new car smell isn't just a scent. It's a premium we pay, often 20 to 30% of the item's value, that evaporates the moment we drive off the lot. It's the pristine tax. But Generation Z and savvy millennials have flipped the script. They see that tax as stupid. Why pay $1,000 for a new phone when a used one for $600 does the exact same thing? Why buy a fast fashion dress that will fall apart when a vintage one is cheaper, unique, and better made? This isn't just a consumer shift. It's the single biggest investment signal of the next decade. The eye-opening math. Let's look at two companies. Company A, the linear giant, a traditional big box retailer. It makes money by selling you new stuff. Its stock has grown an average of 6% per year over the last 5 years. Solid, stable, but linear. Company B, the circular engine. The RealReal, the luxury resale platform. It makes money every time a handbag or watch changes hands again. Its gross merchandise value, the total value of stuff sold on its platform, has grown over 40% per year. The stock has been volatile, but the model is a rocket ship. But here's the real magic, the platform math. If Company A sells you a $2,000 designer bag, they make that sale once. Their relationship with that bag ends. If Company B facilitates the resale of that same bag 5 times over 10 years at an average price of $1,000 each time, taking a 20% commission each time. Total transaction value, $5,000. Their total commission, $1,000. They made half as much money as the original manufacturer without ever owning the bag, managing inventory, or dealing with manufacturing. They are a toll booth on the circular highway of stuff. Animated graphic shows a bag moving in a circle, paying a toll at each pass. The toll booth fills with cash. Addressing the objection. Now, you might be thinking, Nick, this is just fancy thrifting. It's a niche for vintage lovers and broke students. It's not a real investment thesis. And these companies aren't even profitable yet. First, the scale. The secondhand apparel market alone is expected to hit $350 billion by 2027. That's not a niche. That's larger than the entire traditional luxury market. Second, you're right about profitability, for now. But you're confusing the map with the territory. The unprofitable companies are the early map makers. The territory, the behavior, the infrastructure, the profit, is being built right now. Here's what most people don't realize. The most valuable player in the secondhand economy won't be the marketplace you buy from. It will be the companies providing the infrastructure that make re-commerce work. This is where it gets really interesting. Think about what you need to trust when buying used. Authentication. Is this real? Logistics and repair. Can it be cleaned, fixed, and shipped efficiently? Marketplace software. What powers ThredUP, StockX, or Carvana's backend? Financing. Who loans money to the dealer selling the used car or the collector buying the vintage watch? These are the picks and shovels of the gold rush, and they often have better margins and less risk than the flashy front-end brands. The actionable system, the Recommerce Stack. Framework. Stop thinking, I should sell my old stuff. Start thinking, how do I own a piece of the system that moves everyone's old stuff? Layer 1, the marketplaces, the most visible, often volatile. For example, ThredUP, the RealReal, Carvana. Layer 2, the enablers, the crucial, often boring infrastructure. For example, authentication services, pricing algorithms, logistics networks. Layer 3, the remakers, companies turning waste into new products. For example, using recycled materials to make new sneakers. Your goal is to build a pyramid. A small speculative tip in Layer 1, a solid base in Layer 2, and an eye on the future in Layer 3. Step 1, the closet autopsy. This isn't emotional, it's forensic. Open your closet, your garage, your tech drawer. For every item, ask, could this be sold for meaningful cash? Not, would I, but could it? This builds your intuitive sense of the market's depth. Step 2, the friction audit. Pick one item you identified. Now, try to sell it. Where do you hit friction? Is authentication hard? Is shipping a pain? Is pricing confusing? The friction points are the investment opportunities. The companies solving those frictions are Layer 2. Step 3, the circularity check. When researching a company, ask, does it make the circle spin faster and more profitably? A company selling cheap new clothes is linear. A company selling durable, repairable goods and offering a buyback program is building a circle. Invest in the circles. Story time. My friend David loved watches. He'd buy, sell, trade. He saw the hassle. Authenticating a $10,000 Rolex was stressful, slow, and expensive. He didn't start a marketplace. He became an expert in a tiny, publicly traded company that made specialized optical scanners used by authenticators. Boring. Essential. His investment in that picks and shovel company has doubled, while flashy marketplace stocks have gyrated wildly. The final surprising insight. When you start seeing the world through a circular lens, you stop being just a consumer at the end of a linear line. You become a node in a network. Your purchases become potential future inventory. Your discards become potential future equity. This is the ultimate contrarian play. While the world obsesses over the next new thing, the next iPhone, the next electric truck, you're building wealth on the simple, timeless truth that what has already been bought will need to be bought again by someone else. Strong motivation and call to action. This week, conduct one transaction in the circular economy. Sell one thing. Use a platform. eBay, Poshmark, Facebook Marketplace. Don't just think about it, do it. Feel the friction, experience the process. Trace. $1. As you do it, follow your payment. Which company took a fee? Who provided the shipping label? Who verified the payment? Research 1. Enabler. Find one publicly traded company in that chain. Just look at its business model. Don't buy. Just learn. You will never look at your stuff. or any store the same way again. Hit thumbs up if you're ready to break the new is better spell. Subscribe for our deep dive into Layer 2, the boring back end of the Recommerce boom. It's time to invest in what's already been bought.